Good evening everyone, and thank you for joining today's session that has been organized by the BISP Solutions. The focus of today's session is on two very important topics in our tax reporting, that is current tax payable and TAR, which stands for tax accounting, tax account roll forward. So these topics are important, and we will understand why in an organization it is important. Right. So tax reporting here is just not about the calculation of profits, but also about correctly determining what portion of these profits must be paid as tax and how the tax should be recognized and reported in the financial statement. So the current payable is the most visible part of this process, as it reflects the actual tax liability and that the company owes to the government for the current years. On the other hand, the tax accounting roll forward, or the TAR we can say, provide the frameworks and automation logic you can say that help us in standardized control and streamline of tax reporting across different jurisdictions. So we in today's session will start by understanding what is current payable, how it is calculated, and how it flows into the financial statement. Then we are going to move into the TAR to see how rules and different configuration in TRCS help us automate and simplify the entire tax process. So by the end of the session, you should be able to clearly connect the practical meaning of the current payable with the system driven approach provided by the TAR. So let's get started. So here in this slide, it is explained that how the current tax payable in TRCS is just not a static number, but it's an automation through predefined schedules. Right. So here that is that first we need the purpose, meaning it helps to prepare a current payable schedule at both entry level and the consolidated group level. Then we can say that we have a movement tract, that is it covers everything from opening balance, payments, refunds, and current year P&L charges, and etc. Then you can say that automation logic, the movements are system driven, not manually, meaning that the TRCS auto populates them into one mapping sets, right? Then we can say the historic data, the automation from includes current years plus previous 6 years data with the consolidation historic tab, sorry. So here you can think it of like a current tax payable automation as a full ledger of tax activity. It starts with the opening balance, adjusts for payments and refunds, applies the P&L charges automatically, and finally give us the closing payable balance. So the advantage is that this happens not just for 1 year but also tracks up to 6 past years. So we always have a clear tax trail. Right, moving on to our next slide, it is for mapping. Right, mapping for current tax payable automation. So this slide explains the configuration steps to make the automation work. So the key steps I'm gonna highlight it for you rather than just gonna read it from here so that you can get it. That is, first we go to our actually home page. Right, from the home page we will navigate to our configurations. Under the configurations we have current payable automation in forms. We have current payable automation national or the regional. We can even create mapping through CY, that is current year P&L charge automation, or current year equity automation, or the RTA P&L automation. Right. So excluded account, then there are excluded account, you can say if certain referring to if certain account that should not be included, like the child member of a parent account, you can mark them as excluded. Right. So you, and there are then the switch signs in it. We are going to see that is, so that will be simply that you can write there yes or no for your own actually according to your own means whatever you follow, it's according to the client itself or the tax automation tax authorities, right? So here you can think it of as the automation doesn't happen here magically, right? It works because we set up the mapping in the TRCS, then we tell the system that the source account feeds into the tax movement members. For example, we will map the current year P&L charges to its automated column, or the RTA to its respected column. We are just going to see the practical after this, right? So this was all with the presentations. We will move to our TAR later, but first let's see how the current payable works. Then we will go to our application. Right, under our application, we are going to our configurations. So here we will see that how the different automations are set up here. Under this we will search for current tax payable automation. Here we have it. Okay, alright, so here we have current tax payable automation. Yeah, it is for national. This one is for national, that means the jurisdiction, or for all, and this is for automation regional, right? So we will both the procedures are same, as the difference is only that we are doing it for a sub region under a nation, that you can say under US we are doing it for Alabama, Illinois, etc., right? So here it is, the account that what we are automating, we get it here. That is our current year P&L charge automation, the current year OCI, other comprehensive income or the equity automation, the RTA P&L automation, and etc. Then the rule here, that what the current tax payable rule runs, that is 111. Then we have the source account. You can see here the source account is that from where it is we are fetching the data from. What is the source of the data, right? So let me create a duplicate tab so that I can tell you how it works. Here you need the P&L charge automated, right? So you need the TRCS tax. So first we are going to go on a dimensions, from where we will pick our account. So before that, let's copy this. As you always have to do Control C, you can't actually have here the right click option to copy this, right? So in dimensions we will go on a name, we will select both, then under this we are going to paste it. Okay, we are going to select it again as it didn't came. Control C. Okay, this is it. We're gonna drill it down, and here we have it, that the dynamic cal, we have current provision. This is the TRCS tax expense, right? Under this we have our TRCS current tax return and current additional total, right? So here you can see we have excluded a account under it, right? So this is the RTA which is under the parent. So this is the parent, right? Under the this we have different children's, like the TRCS current additional cal RTA, but we actually don't want to include it, so we can exclude it here. The child, we want to exclude it, right? Then the switch sign is that if you want to include it, then yes. If you don't want to include it, then no. If there is no information, just leave it blank, right? So here we have different one, like in this. So for continuing, let's remove some so that we can continue with just the basics one, as I already told you that what you want and what you needed to put here. Like this is your account, right? So in current year P&L charge automation, you will take from which source account it will come. That will come from the current tax expense, right? Then we which account to exclude. Under it we have our RTA, current additional RTA, right? And we will switch it on. Then we will save it. As you can see here, it's taking its time. If you hover on it, it will tell it's busy, right? Under this, now if we go to a tax payable regional itself, you can see it has the same base as the old one, right? It is just about the jurisdiction that we are actually including or excluding. Okay, apart from that, it's all same as the current tax payable automation. So let's close this one. Now we will go to navigate to our home in both both of them. See, the workings is all here. Before explaining the TAR, you will see that how actually TAR works with the help of this section itself. So here we will go on our TAR itself, and here we will open up another one, that is our package. Alright, under this we have current provisions, and now we can go to current tax payable. Actually there's a huge this was our there's a huge actually column that has different things, so I'm gonna explain it one by one, right? So here you can see the year of origins. That means the column shows the year in which the particular tax liability was created, even if it was not settled for many years. Its year of origin remains the same. It also helps us track how old the liability is, and is used for the audit and compliance, right? So the tax authority often reviews it as you can say that old balances. The next one is our opening balance here. This means the carry forward of the unpaid tax balance from the previous years. It provides the starting point for the current years. Without this, we won't know if it we still owe taxes to the authority or not. And in this we actually are talking about the old taxes, right? Not new ones. So the next one is our opening balance adjustment. In this, the adjustment made to the opening balances are due to either the correction of the prior year errors, the system migrations, or the restatement, or the foreign exchange adjustment. You can say that is that the multi-currency reporting, you can say, under this. Then here you can see beginning balance. Here it means that the finalized balance after including the opening balance plus the adjustment. So this is a true starting point for the tracking payments and refund during the year. Right. Next one is a payment. Here the payment actually means that actual cash paid to tax authorities during the year against the outstanding liabilities. This shows how much of the liability is being cleared, right? And then we have our, actually this is the more reliable one. We can have our here the payment details, right? So here the payment details actually refers to a drill down view of each payment, that is date, method, or the partial payments, you can say. So it actually helps auditors and tax terms or tax teams reconcile the payment with the bank statements and filing, right? You can say that the FY22 payments were 600k in March, 400k in September. So the payment detail with the list in both, right? Next is the payment total. That is our total of all payment made during the year. That it makes easy to see how it was all settled. Then we have the refund, the amount received back from the tax authorities due to overpayment or credit claims. Then we have the refund details itself, and then we have total payments and refund details. Now we will come to this one, that is CY, that is current year P&L, current year profit and loss charges, meaning the tax expenses charged in the P&L for the current year. That reflects either the accounting expense, not the cash outflow, or a bridge, the difference between accounting profit and taxable profit. Whereas the current year profit and loss charge automated shows the next one here, that the system generated P&L charge tax based on the TAR, that is tax accounting rules. So it removes manual dependency and ensures the consistency across the jurisdiction, right? So this was all about this actually column where we are gonna put our data. So here you can see all the 6 years, that is if we are taking 2022, then it is 21, 20, 19, 18, 17 and 16. right? If I need any balance to be shown here, I can manually input it here, like 12,000 in any of the years, but let's leave it. We can if we go to 2013, let's see, will it show us the amount? Here you can see that in 2023 there is amount from 2022, right? That was that was the closing balance. If we will see here, that was the opening balance is 5568, right? So let's go to 2022. It is 5568. You can see here the total one. After the automation, it changes to 599217, right? So for example, here I have made some payments, so I can actually automate it, right? For example, instead of 40,000, I have made a payment of 3 lakhs, right? Instead of 10,000, I have got a refund of 50,000 here, right? So then we will save it and it will automatically show us. See, now if we go on this page itself, it's gonna refresh it and see, it is automatically showing that what we have actually inputted here, right? So in the end here, if you go, here's the opening balance at the between adjustment, here is the closing one, right? All the addition in it. Then after that, what is the you can say that what is the closing payable closing balance here. If we go under the tax current tax payable automation, here you also get it. Here you get it, the current payable ownership, the payable closing balance itself, right? Or the current year P&L total charges, that is the 11 lakh 1,167 460. Now here under this, I think so, yes, it shows us under here. Here you can see it, 599,217, 599,217. So the tax expense under this, we are getting it from the current provision from right here, right? You can see it from where we are actually bringing it, from where we are bringing the opening balance, right? Here are the automations. Now you can see here that here are the payment details, but we can't actually interfere or edit it from right here. So we have another actually form, that is the current tax payable details, which will help us to input the data from right here. Here you can see that in month 12 we can actually take it that in this we have made 50,000 and then we have made 1 lakh. Then it is gonna come out a total of 150, right? Now I will go to my current tax payable automation. See, here it is auto updated right here, that payment details were 1,50,000. Here was the payment total was of 4,50,000. 50,000 was the refund. The total refunds was 50,000. That means adding the 4,50,000 plus 50,000, it gives us 5 lakh, right? And it's automatically updated in the current tax payable. So let me make a duplicate of this. Okay, now we will go to our application. Under the configuration, I'm just gonna put the configuration here. You can say that this is your source from where it is coming, right? But we actually get that account from the dimension itself. You have to actually look that this account where it is actually under in the dimensions in account section, under which parent it is, and is it child or what it is, and then we actually go on the configurations. We put there that from which point we want to actually need the data, then we fetch it from that source itself, and then the target is our current tax payable, right? So it actually takes the data from this and put it here. The whole procedure is done through the current tax payable automation from right here. right? So here I have to take in the source account, that where this amount was, right, under which account or the parent. Then under the parent there was child, so I excluded one. Then I said yes, so it took the amount and put it right here, right? So for the next year, even if I do it, so the next if I go to 2023, you can even see this, that there what were the changes. Let me go there. Here you can see that the 2022 were 555, 68, 243, right? Current payable taxes, these are all the carry forward details. You can see here it's automatically updated on the next year itself. So if and even if you take 2023, then it's gonna take the prior 6 years, that is from 22 to 17. If you take 22, then it is gonna show you from 21 to say 2016. So this is actually how the current tax payable works, right? Now let's close this up, right? And now we will move to our next topic, which is as same as the current tax payable. Its procedure is also same as that, right? We will go to our home page, then on our presentation. So let's start with the next topic, that is TAR, that is tax account roll forward. So the TAR in the TRCS is a rule based engine that automates how the tax amount, that is a current tax, deferred tax and ETR, are calculated, classified and posted. Instead of manually applying the formulas, TAR ensures the consistency across the entities, jurisdiction and reporting standards. You can think it of as a brain of tax reporting, right? It applies the logic once, then drives automation for all the tax accounts. So it helps us in standardization, that is the same rule that apply globally, so no manual inconsistency. Or you can say the efficiency, we can add on efficiency also. Instead of preparing multiple spreadsheets, TAR automates tax calculation inside the TRCS. Then it has its own feature, that is audit readiness, as its every amount calculation is transparent and traceable. Then we have integration, we can say under this one feature of it, that is link book income, adjustments and adjusted books and tax rates directly to tax expense and payables, right? So before that, we can we actually how I'm gonna say that it's actually not a specific part itself. It has different multiple parts of tax. Like we have the tax current tax payable calculation, did what I actually told. Then it also take the amount from deferred tax recognition, even from ETR and the book to a tax adjustment, then post it in it. Like so we can take examples in the Excel itself. Here we will go to our Excel sheet. Under this, let's say that we can take an example of the current tax payable itself. So let's take current tax payable, that is CTP. So the CTP here, where the TAR picks up the taxable income, applies the relevant rate and determines the current year P&L charges. For example, your pre-tax income was, let's say 25 lakhs, right? Then the tax adjustment here was 5 lakhs, we can say. Right, and taxable income was be 20 lakhs, right? So we have a tax of 21%, right? 21%. Now the TAR helps us to automatically calculate the current tax, that is the CT, or we can say the current tax, that is, I think, let's put the formula right here. that is a 4,20,000, right? So it helps us actually calculate the current tax itself through the automation. Then it also helps us in deferred tax recognition, as the TAR identifies temporary differences, that is depreciation, provisions, and automatically created deferred tax or deferred liability. We can take another example. Let's take for the DT, the short form for deferred tax. Here we can take a book depreciation, book dep of 1 lakh, right? Or let's take it for actually, yeah, it's 1 lakh. Okay, 1 lakh is fine. Then we have our tax depreciation, what we can say, that is 2 lakhs. So now here you see that the difference here is 1 lakh, right? So it automatically calculates that the difference here is 1 lakh first of all, right? And then it applies the 21% tax rate. 21% tax rate. So what will be the tax right now if it will automate it? It's gonna be 21,000, right? Or 21% of 1 lakh. So like this, actually the TAR help us out. So let's close it and go to our application so we can work on it. So now we are gonna go on our application. Under the configurations, we are gonna see the TAR automation itself. We are gonna search for the TAR automation. Here we have the TAR automation. Now under this, we are gonna change our year. In last one we were working on, I think so 2022. We will save it. So just a minute. Under this, first of all, I'm gonna go on packages. I'm gonna change the year. If you change the year from there, it's actually taking way too long to actually switch to a different year. Same here, so here in the configurations, under the TAR automations. Okay, it's loaded. So here as in the when we last loaded it in 2022, you can see that it was empty. So we actually have gone to the package if it to see that the year really did change, or if we can even change it from any form itself from there. That for if you change the year in it, like from 2022 to 2023, it will automatically change here also, right? But you just have to refresh it. But so here we have a different actually column itself again. That is that source account national, that means the national level account that provides the data for automation. Then excluded national, that is if certain child under the national parent should not be included in the automation. Then we have the source account regional, instead of the national level we have a regional level account mapped to the automation. Then the excluded is that if there is a child that has to be excluded under the regional. Then we have a data source, which refers as the identification from where the data is coming from. Then we have the movement that defines how the data flows in the automation schedule, you can say it. Then we have an intercompany used in the mapping that involves the intercompany transactions, right? And as usual, we have last one should be our switch sign, that is the control whether the sign of the number should be reversed or not, right? So here you can see in this year I have actually the period 12 year FY 2022 in the scenario actual. Under the account expense, I have taken the source account national right here, and we haven't excluded anything. Then we have a data source is tax, that means it's coming from the tax section. Our movement is automated, right? Now we will go to a tax automation book balance. Under this you can see that here we are bringing it from the tax current expense. that you can see that here actually it's telling that it's 7903 when you will click on it, right? Then here we have the data sources pre-tax and the book closing. So now we are gonna make a duplicate tab of it, right? As we have done it for the as we have done it for our actually the current payable, we are going to do it again for our TAR itself. Alright, so under we are going to go to and navigate to our TAR here. Under this one we are going to navigate to a package, or instead of package you can say that we can go under the package. We are going to go under package. Then here we have a TAR, right? Let it load everything. Always remember that both the workings are same, means the automation process. Don't go on the meaning, I'm just talking about the working on the application. First you configure it, the source and the target, then you actually feed the data according to it, and after that you actually run the consolidation or the business rule you say, and then it will actually automatically update it in the TAR section, right? So under TAR, let's go to the total current and deferred provision, that is our 6993. Here we can see that we have, when we actually had we have here is from our current tax payable, we have the amount that was actually after amount it is, but also the opening for this was that the automation was 6993090. So here you can see through the auto through the configurations and the automations, when we have taken the current tax expense, right? So here you can see it is actually putting it here, the total current and deferred provisions, right? Under this, here you can see it. Then we can also say that and total UTP, it's not, as we have chosen should be okay. Here it is. Here under this we have here the last one we have chosen was that the current tax provision for US actually, right? That what it was what we were applying on it. So we are going to go on our forms. Under our forms we are going to go in our income sales income statement by source, and here you can see that we have the tax expense US state, right? So because actually it's the data storage is actually never shared, or it's not under any parent itself, it's a parent in itself, right? So we have actually put it in never shared, so this amount is not coming here. So if we change its actually data type, then it will show here. So if we change it, here you can see the value, that is 10603. You can actually see it right here in this current expenses box, right? That is as per the current tax expense US that we have actually put in this configurations. So here we have understand that what actually is the current payable automation is, that is how it actually through our automation input, it actually automatically calculate the value itself and put into the TAR file. And in TAR, that is our tax account roll forward, we have studied that how there are different components under it which are actually calculate itself through the automation, and then through the TAR automation it put the values in the TAR report, right? So just let me show you this. Under the, see here we have taken the current provision, that was 633. You can see this was it. In the tax automation we have taken this value, the current provision, so it is putting it right here. and if we have taken the tax US expense, it should put it right here in B section, but due to the data storage type, the balance is not showing. It's not a problem. You just have to actually change the form itself. So this was all about our today's session. So today's session we have learned about the different components of TAR, that is the deferred tax and our current provision under it, current tax payable, right, and the workings of current tax payable itself, that how it automates, or the TAR automates the value itself, and how we configure it through our configurations. So if you have any doubts or any question, you can comment me in the comment section and I will answer it in your next session. So thank you for connecting with me in this session.